Brian, we think a lot of this rally is due to Jerome Powell's moves here. From our perspective, not a lot has really changed. When Gina was on earlier talking about the economy, talking about the market, I think she's spot on. What we really got here was the Fed easing, turning more dovish. And we still think for this entire year, Brian, we're probably going to be range-bound throughout 2019 for a couple of reasons. First, we really need to see earnings start to pick up. We haven't really started to see that happen. In fact, earnings for 2019 have been starting to get cut and are actually coming down. The second thing is, what's really changed with the yield curve? Still remains very flat at this point in time. And so from my perspective, are we really going to make new highs with earnings estimates coming down and simply assigning a new multiple to this market? I don't think so. And then also right now, seasonality-wise, in the third year of a presidential election, typically very strong from January to July, and then you sort of fade from July to December. So from my perspective, a lot of the easy money is getting made now. A lot of the portfolio managers we talk to recognize this, and right now they're thinking, hey, tech is up 17+% for the year.
Small caps up 16%. Dow up 11%.
Correct.
Best start to a year since 1987, I believe.
1987. So they're thinking at this point in time, let's bank some of this. Are we really going to be pushing the new highs right now? Let's take some profits. Let's rotate.
If our viewers sold in December, don't do that, by the way, if they sold in December or if they weren't in the market to begin with, is now the time to put new money to work?
I don't think now is the time to put new money to work. Again, when we did the show from San Francisco. It was a late night that night, but we did the show.
Or an early morning, depending on, and we appreciated it, by the way.
It was great, but that was when you wanted to put money to work. When everything was negative, the market was coming in hard, that is when you wanted to put money to work. And now, I think you're at a point in time where you want to selectively be taking some profits, playing a little bit more defense and trying to play some offense.
Because your year-end target on the S&P 500, 2725, and
Correct.
if my just simple math, that's lower than we are right now.
That is correct. And hence why we think we're going to be probably range-bound this year until a lot of these issues get resolved with certainly on the geopolitical front, also on the earnings front. There's a lot of issues that need to get addressed.
Well, the trade stuff looks like it's getting addressed. Some optimism,
Correct.
right? President Trump tweets. President Xi and he are going to meet at Mar-a-Lago. There you go. Brexit's going to come to some kind of a head soon.
Definitely.
How much does that matter, though, to our equity markets?
I think the bigger question, Brian, though, is how much of that is priced in already. There's been a lot of enthusiasm that we're going to get a trade deal, we're going to get Brexit, everything's going to be great, everything's wonderful. The doves have been let out by the Fed, and at this point in time, I think that's been reflected in the market. What's next is the bigger question that we need to ask ourselves with the market as strong as it has been.
So I've got a very
for the year.
important question for you, Craig.
Sure.
What's next?
What's next is we ultimately need to
You
see.
said the big question is what's next, so I said what's next.
Absolutely. So what we need to see is we need to see earnings pick up. We really need to see an acceleration in earnings, and we need to see these tax cuts really start to flow through. It's too early for the tax season right now to really see that fall out to the consumer quite yet, but we need to see in the charts further breakouts, further accelerations, and again, a lot of good news is priced in.
What I love about your work, by the way, and you were right on if you weren't following Craig's work last year, he was spot on. You were spot on. So we're glad to have you on set here. Some of your charts have happy faces on them.
Correct.
So look, you can't tell it's a happy face. This is a pre-emoji happy face. So I know that you are at Piper Jaffray finding opportunity
Correct.
somewhere. So the macro markets you think may be flat the rest of the year to even slightly down. But there's, as Jim Cramer says, there's always a bull market somewhere.
Correct.
Give us one or two quick places that you guys are finding opportunity right now.
Yep, and Jim is spot on correct. We're finding opportunities in restaurants. Stocks like Chipotle look constructive and are breaking out.
Been a hot stock already, Craig.
Looks like
One of the
there's
best performers, the S&P 500 this year, if my brain is correct.
It is among the strongest, but it looks like there's more room to go. A lot of the challenges are getting put behind
You
it.
love the chart on Chipotle.
We love the chart on Chipotle. It looks like there's more room to work. We also like the semiconductor stocks. We think Intel looks constructive. We think Broadcom looks constructive. So these are names that we are continuing to be buying inside the market at this point in time.